Well, if you want to talk affordability, there are and have only ever been three variables that you play with: price, rate, and wages. Again, one of the ways that you can fix affordability is just to have a wage increase, right? If you take wages and you throw them up 5% or 7%, and I'm talking about real wages, not nominal, right? I want adjusted for inflation. That will be helpful. All righty, folks. So we have talked about housing being a rough year. You have heard me talk about housing transactions being below 4 million. This morning on the Daily Financial News, we let you know that Fannie Mae is calling for transactions to be down to the order of 1995. That's 30 years ago. I actually didn't know how bad 1995 was until I went to the 53-year spreadsheet, which I have in the background, and we will pull up. But before that, let's welcome Matt, the mortgage guy, to the channel. How you doing, buddy?
I'm doing great, Mike. I think this one will be fun because I want to dig out some numbers and I want to disagree with Fannie Mae for a couple of reasons. But I want you to give me the data first, and then we can see how with 60 million more Americans as part of the population, it's something like that. It's like 280 million to 340 in those 30 years. How the heck we're going to do less transactions? It'll be interesting to see.
Yeah, so we're going to pull up in a moment. I just want to get everybody really zeroed in on what we're talking about. We are not talking about new home transactions. We are specifically talking about existing home sales, just so we're zeroed in over the right target. Also, we are not talking about mortgage refinances. We are not talking about even purchase mortgages, because some of these could be cash transactions, seller financing, all of that. So at the end of the day, Fannie Mae says that 2025 will be the worst year since 1995. So let's take a minute. Let's look that up and just see how ugly 2025 was. So I am now sharing it. Matt, can you see it?
It's coming. Yep, it's up. It's up. The spreadsheet is there.
Let's just highlight this row. We'll put this in a light orange for you. I've highlighted the column 1995 in yellow and the row existing home sales in what I will call orange. And just so we have, just so people lay the land, I give this data away for free. All the data sources. Looks like I can't click the tabs. Oh, well, there's a data source tab down there, which you can click on to see all the links to, the Fed and all of that. But if we scroll over to the right, and this spreadsheet, I think, goes to 2022, you could see that we were doing existing home sales of 5 million, over 6 million in 2021. But we had been above 5 million since 2015. We dipped below it in 14. 2011, 10, those were not great years. We were down in the low 4 million. So 4.1 is the cycle low so far. 2008, 4.1, again, the start of the GFC. I'm just seeing where the numbers break. Oh my God, look at 2005, 7 million existing home sales.
Wow.
Bubble, baby.
Oh yeah. Yeah. There was not a lot of,
underwriting going on.
Yeah, not a lot of friction for home loans, that's for sure.
Wow, we were above 5 million transactions from 99 till 2008. So
go back to the 95 number again on existing
I'm going. Slow your horses. Damn, kid. Like a child. Oh, 3.8. So sub 4 million, like I have been calling. So yeah, they're calling for sub 4 million. Fannie Mae says it's going sub 4 million. I'm going to see.
I guess it's good to note, like you said, we're talking existing homes sold. There was nearly 670,000 was the new homes back then. Yep. It'll be interesting to see if the new homes number continues to go up. Yeah. For new homes sold, because what I know from my vantage point is new homes and their ability to structure lower mortgages and make affordability easier for people.
It's a payment decision. You know that. You're a mortgage guy. It's all about payments, and new home builders have a have an advantage over existing home sales. So again, the lowest since 1995 was 4.1 at the peak of the Great Recession. That was the low. So they're saying that we're going to be lower than that. I will call out new homes. Their low was 2011 at 306, which is
not a lot of people
wild.
building in 11.
Yeah, building in 10, 11, exactly. So, yeah, that's what we're talking about here. So again, I think I'll say it right now. I think new home sales will be strong this year, but existing home sales below 4 million. Again, and it doesn't make me fun to say that. And again, how did I call that number? I went back and studied the last time rates skyrocketed. So if you go back and watch interest rates from let's go 1978 to 1982, they went up 700 basis points or 600 basis points. And then if you go up here, you can see housing transactions go from 4 million to 2 million over 5 years. So I'm just going like, well, there we go. That's why 2025 is going to suck. History will repeat itself.
Wowzer. So 7 million was the peak in 21. And if it's a similar type of trajectory where rates, double, and you've got, a halving from 4 million to 2, you think we can go from 7 to mid threes?
I think given the population gain that you just pointed out, it's going to be like 3.8, 3.85, right? Because we just have 60 million more people. But yeah, we're going sub 4 million. It's been my call for months, and I see no reason to change it. I hear the January numbers are atrocious.
Yeah, it'll be interesting to see what follows that, because mortgage applications, what feels like buyer sentiment, there seems to be a little bit of tailwind in the market. Maybe it's a short-lived, new administration, new hope type of thing that's being injected in the market. But with that being a case of how low we can go, maybe we talk about some things that the Trump administration might be able to do, because they've talked about, I think this is interesting too, Mike, to talk about, making housing more affordable, making everything more affordable, quite frankly, is the talk track of the new administration. But what are some things that they could possibly do, whether they've talked about it or not? I think it'd be a fun conversation for us.
Yeah.
That would pump that number up above 4 million and not have it, be a 30-year low.
Well, I think there's a couple of things. If you just want to talk big picture, again, I'm not convinced that Trump directly has the power to do this. But if you take the umbrella of the Trump organization, which will include Fannie, Freddie, all of those things, if they could find a way to do one of two things: one, get mortgage rates to 6% or below, transactions will take off. We have historical precedent that even at 6.1, demand takes off. Obviously, my call is rates are at 7. But if there's anything they could do to get rates to 6% or lower, housing will take off. Second, the other thing they could do is they can get really creative. Again, something that I think would be freaking game-changing to the entire U.S. real estate market is if you made loans transferable. Let's say you are Lance Lambert, CEO of Resi Club. You bought a home in Cincinnati that is now too small for your family. You have a 2.9% mortgage. You want to buy a bigger home. What if we made that 2.9% mortgage transferable to the new house, and then you took out a second loan for the delta? Because again, I'm going to assume the second house is more expensive. That would be game changing, right, to the housing market. Yeah. Again, I've not heard anybody talk about it, but if you want to play what if with me, game changing. I mean, shoot, I'd probably use that on some of my properties.
You know what I just thought about, Mike? Because there's a lot of different ways to do this. Administering it gives me a headache even thinking about it. But when somebody comes in and I don't know what the wording is, eminent domain, or the city says, hey, we need your home for this reason. I've been part of it where they've told the buyer, hey, we get it. Like, you've got a 3% interest rate. Here's your payment. And it's not as easy as like, here's some money, go buy a new home. And so
Right.
I don't remember the exact calculation that was done, but it was like, hey, we've got 400,000 at 3% at this current home. If we're going to go borrow 600 to buy a replacement home at 7%, we don't expect you guys to quote unquote reimburse us for all 600.
Mm-hmm.
But the difference between the 400 that we had lent to us at 3% and 7%, there was a math equation that could say, here's your payment, or here's your subsidy, or here's this.
Yeah.
You could do it that way.
Sure.
Where people were kind of free to do what they would do, getting loans in the open market.
Yeah, I like it because, again, what I've been telling people for years is that, if you're, let's be very clear. If you're borrowing 30-year money at sub 3%, for most people that have that, it will be the best asset they've ever owned. And there's there's value in that. It just is. So, yeah. So again, if you want to talk about that, I know they've talked about freeing up federal land. Again, something else they could do is they could incentivize the creation of entry-level housing, which really hasn't been a priority since the 70s. There's lots and lots of things they could do. But until you get rates down to 6%, I think it's all just dancing around the graveyard. It's noise until you can, because you got to affect the payment.
Right. I guess the argument is, how do you do that without throttling demand too much and having an issue
they go hand in hand. Oh no, you can't have one without the other.
Because the solve is affordability. So like, I don't care if I get a 6% rate if I got to pay 40,000 more, because then it just all levels out. Which I guess the market's going to function how the market functions. But that would be
just to be clear, I was solving for transactions. I was not solving for affordability.
Okay.
You're confusing. You said, how can we not have below 4 million? And I told you lower rates.
Right.
And
I agree 1,000%. Yeah, there's going to be a lot more transactions if rates come down. I started to let my head spin around this. How would a new administration really go and tackle affordability in a meaningful way?
Let me see it. How do you do it?
Well, it's got to be more inventory. And there's a number of ways to do that. I think, like you said, if you incentivized building smaller homes, and I don't know what level it would have to be at, state, local level, but you take that $100,000 before a hammer gets swung and turn it into 25,000. And, but then you also have to have checks and balances in place to where it just doesn't make the margins bigger for home builders. Home builders all go build and they're like, yippee, cheaper to build, less red tape. We're and their stocks double. It's got to make sure that it gets passed on to the end buyer. So yeah, it's not easy stuff to solve. So part of me is glad that I'm not.
Well, if you want to talk affordability, there are and have only ever been 3 variables that you play with: price, rate, and wages. Again, one of the ways that you could fix affordability is just to have a wage increase, right? If you take wages and you throw them up 5% or 7%, and I'm talking about real wages, not nominal, right? I want adjusted for inflation. That will be helpful. And, that unfortunately is the solve that I see coming. But unfortunately, as history shows, wages increase 3, 4, 5%, and it's going to take years to bring affordability down slowly, right? Yes, we will have hopefully lower rates in 27 than 25. Yes, my hope is real estate prices stay flat. And, my hope is wages continue to go up. 2024, we had real wage growth. I hope we have even more real wage growth in 25 and 26 and 27 and 28.
I had an interesting question posed to me in a mortgage group, and I can pose it to you as well. A pure hypothetical, but if it made it significantly easier for buyers out there, would you, as an owner of real estate, take an immediate 10 to 15% value haircut on your real estate holdings?
So I don't understand the question. Just somebody waves a magic wand and all real estate is worth 20% less?
Yeah, 10 or 15% less will probably do the trick. It was posed to originators because a lot of us own real estate where it's like, hey, as much as you're a champion for a home buyer and for affordability, if we could wave that magic wand, again, it's hypothetical, and your $700,000 house is now worth 600. My response was, sure, because the stuff that I'm holding on to forever, whether it's worth 700 or
Yeah,
600 or
doesn't
a
matter.
million or 850 is really irrelevant. It's not something that we have the
Yeah,
power to do.
to your point, everything I own, my intention is to own forever. I'm not a flipper. I'm not somebody chasing equity. I haven't rolled equity in almost a decade. So yeah, I mean, it's a non-irrelevant. I mean, it wouldn't impact me at all. But again, questions like that, you got to remember the trickle down effect, right? There's a lot of people where this is their biggest asset. Most people don't own rental properties. They just own their home. And if you're a baby boomer or somebody getting ready to retire and you were counting on that extra 70K, that's a significant hit. But yeah, I mean, it's an interesting query. Let me know in the comments below, folks. Would you take a 10% haircut on all of your real estate just to make it easier for people to buy? Let me know in the comments below. It'd be interesting to think about.
Yeah. One last thing, Mike, before we go was,
Sure.
gosh, I lost my train of thought. I had something. I forgot.
There you go. We'll go to greatmortgagebroker.com. If you want to get something started, get a file started, talk refis, talk seconds. Frankly, if you want to go just get a quote because you got called by a body shop and you think they're ripping you off, they probably are, but maybe not. Probably are. Reach out to Matt at the Mortgage Guy, greatmortgagebroker.com. Closing thoughts?
I think that's it. It's not going to be anything that happens, quickly. But to your point, I think over time, 5, 7, 10 years of slow and steady wage growth, some flat prices, and mortgage rates trickling down, all those things combined are going to make it feel a little bit better. But it's almost laughable when you see the things about prices got to go down 40% or rates need to come down 3%. None of that stuff is going to happen. And so you're hoping it becomes slightly more affordable, but there's no magic wand and there's no transporting us back to 2019 or some other time in history where it was more affordable. So you just got to work with what you got, and just because it's harder doesn't mean it's impossible. Get out there and do the work. Talk to somebody. We're happy to help. Go to greatmortgagebroker.com.
Thank you, buddy. Take care.
Thanks, Mike.